Greetings, my name is Christopher Bell. I'm a certified public accountant. In this video, we're going to cover the concept of sum of the years digits depreciation, which is a very special way of taking accelerated depreciation on a business asset, for example. So this scenario, we're going to have Christopher Bell, this is me on the left. I'm going to be buying a sports car for my business because I totally need this for my online accounting tutoring / YouTube business. So, how are we going to depreciate this car? Well, using the sum of the years digits depreciation method, we are actually using an accelerated method of depreciation where we take more depreciation expense up front, and we take less depreciation expense on the back end. So you're going to see the numbers will change every single year. You will take more depreciation up front. Now, to start off, we have to figure out the cost of the asset. So in this example, Chris buys this car for $50,000, and he estimates that the salvage value is going to be $5,000. The salvage value is just the residual value of the vehicle once you've completely used up and its useful life has been exhausted. So the depreciable basis, the amount that's going to be depreciated, is $45,000. And it's just the difference between $50,000, the cost, minus the residual value when you dispose the car. So we're going to be depreciating this amount over the next 5 years. 5 years. Now, in this thing that I made, this Excel calculator, we could actually modify the number of years if we wanted to. I'll save this for later use. But in this scenario, we're going to assume that the car is going to last for 5 years. Chris will use this car in his business for 5 years. Now, the first thing that trips people up is, well, what is the sum of the years digits? Well, very simply, you take whatever number your useful life is, 5 years, and you add up all the numbers minus 1 for each year down to 1. Now, if that doesn't make any sense, here's an example right here. 5 years, we start with 5, and then we add 4, and then we add 3, and then we add 2, and then we add 1. So you can see you're taking the prior year's number, you're subtracting 1, and then you're adding it to the prior year's number. So when you sum up all the digits, when you go all the way down to 1, you get a total of, in 5's case, 15. 5 plus 4 plus 3 plus 2 plus 1. Now, if we had 10 years, the sum of the years digits would be 55 because it's 10 plus 9 plus 8 plus 7 plus 6 plus 5 plus 4 plus 3 plus 2 plus 1. Does that kind of make sense? So this number that you're calculating when you sum up the sum of the years digits is going to be the denominator in the fraction that you're going to be multiplying the depreciable basis by as you're calculating depreciation expense. So let's go ahead and dive into it because when we actually see the problem, it makes it easier. So in year 1, we're going to take the most depreciation expense because it's an accelerated form of depreciation where you take the highest amount first and then it goes down over time. So our first year, we start with the 5, which is the highest year. We divide that 5 by 15, which is the sum of the year's digits. And then we take that number and we multiply it by the depreciable basis. So when you multiply these two numbers together, you're going to get a depreciation expense of $15,000. Now we do the math and we say, okay, our beginning book value is 50. Minus depreciation expense or accumulated depreciation gives us our ending book value. And then the next year, our starting book value is $35,000. Now the question is do you take that $35,000 and multiply it by 4 over 15, or do you multiply it by something else? Every year, you're still using the $45,000 as the depreciable basis, because if you add up all the fractions, it adds up to 15 over 15, which would completely use up the 45. So the next year, we take 4 over 15 times 45,000, gives us our depreciation expense of $12,000. And you do it every single year. So the next year, then it's 315 times 45,000, 215 times 45,000. And when you get to the final year, guess what your ending book value is? That's right. It is your salvage value. And you know you're right because we've done 5 years. We've taken a total of $45,000 of depreciation. Our accumulated depreciation is $45,000. And our ending book value is $5,000, or 50K minus 45. So that's literally it for some of the year's digits. It's confusing up front, but if you put it into an easy to understand table, it's a lot easier to understand. And maybe I'll even attach this Excel sheet as an example to kind of help you grasp the concept. But all you do is you plug in the numbers, you add up the sum of the year's digits, and then you make sure that the ending balance, the ending book value is $5,000, and there's your answer. So hopefully you learned something. Hopefully that makes sense. If you like how I teach, if you like this lesson, I'm willing to give you one-on-one accounting tutoring. There will be a pinned comment down below. Have a wonderful day, and good luck to you.